Hello, it's Forex News for Monday, April 26 and me, Kate Tichina. The British pound continues to resist the strong downward pressure caused by the political situation in Great Britain. Probably the British currency is supported by the hopes that finally the situation will be solved in the positive way. Presently, the political prospects are so bad that it cannot be worse. The recent public opinion polls point to the fact that as a result of the national elections in Great Britain, which will take place on the 6th of May, there can be a situation when none of the parties will have the majority of votes in Parliament. However, the results of polls signal that in the Parliament, formed in consequence of polls, the Liberal Democratic Party will have the most part of votes than it was expected earlier. The Prime Minister and the member of the Labour Party of Great Britain, Gordon Brown, most likely will again be at Downing Street 10 with such alignment of forces. The similar situation points to the leadership of the government, which is less inclined to solve the problems of the country's budget deficit, and also to the obtaining of the power by the administration, which most probably will adhere to the policy of expenditures and taxes that can damage the prospects of the economic growth of the country. Nevertheless, even until these unfavorable economic outlooks will become evident, the pound also may face with the uncertainty of the protracted negotiations concerning the coalition to which the political system of Great Britain does not get used to. About 40 days will be needed for the formation of the coalition government in Europe. However, a lot of European countries got used to such practice. Moreover, the pound continues to retain its positions, and the per-pound dollar is traded above the rate of 1.50 and does not show the signs that it will again test the lows below the level of 1.48, achieved at the beginning of the previous year. Apparently, the belief in the Great Britain economy is not the reason of the stability of the British currency's exchange rate. The recovery signs are presented by the increase of the economic activity remains vulnerable. In this case, even despite that the data on the inflation published on Tuesday turned out to be a little higher than the forecast, the Bank of England will hardly start to advance the interest rates this year. The growth of the annual consumer price inflation in Great Britain to 3.4% in March against 3% in February was mainly caused by the increase in oil and fuel prices. Meanwhile, the high level of capital underutilization in combination with the difficult situation at labour market will guarantee the falling of the inflation till the end of the year below the rate of 2%, which is the target level of the Bank of England. In this way, the facts show that the policy is only one real orienting point for the pound. It was Forex News provided to you by InstaForex News team. Goodbye.